Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I have Alex Pecorreli, CEO of Vertex.Market on the show with me today. Welcome to the show.
Hi, thanks for having me.
All right, you're welcome. All right, Alex, talk to me about cryptocurrency exchanges.
Well, cryptocurrency exchanges, there is a lot of them right now. I think we have seen in 2018, it was the year of cryptocurrency exchanges. So all the countries in the world, new cryptocurrency exchanges started to exist, which led also to the problem of having actually liquidity and volume on each exchange. So if you spread all the market cap through hundreds of exchanges, one can expect that liquidity will be a problem.
What about OTC trading?
I think OTC trading is very existing. Like a lot of people use OTC desks to trade right now for major cryptocurrencies such as Bitcoin or Ether. Mainly Bitcoin. I'm aware of quite big trades of a couple 100,000 Bitcoins, but for project tokens or security tokens, so far there is nothing existing.
How about
not that I'm aware of.
Okay. How about project evaluation?
Well, we have ICO bench, right? And then we have ICO drops that are major companies, but actually evaluation right now, everyone does it for himself. I think it moved a lot since security tokens are the next big thing. The evaluation has a different point. It's more the traditional venture evaluation, but it's a big topic, definitely. There is still a lot of projects out there that I think that will not have a big success coming. And if you evaluate properly, you can find them and spot them out.
What problems do you see in the crypto space?
Well, first of all, I think it's still the reputation that it got. I personally still fight like everyone in the crypto space with the reputation that we're suffering from all the scams that happened. There are actually right now, I don't think the scamming is as bad anymore as it was before, but the real problem is that there's a lot of cowboys right now in this market, and it needs some solid business people to join the market to make it a serious business landscape. But I think this is happening right now. So actually the problems are to be solved in the next, I would say, 12 months.
And how are they going to get solved?
Well, it's a good question. I got this asked a lot, but I think with traditional money coming into the market, big money, we represent some of that money ourselves. I think it's clear that new structures, new types of trading and new financial instruments will come to exist. For example, ETFs that will also help on the volatility of cryptocurrencies as well as the reputation itself. I mean, if major companies or major banks start to have investments into security token companies, it will legitimize the whole sector, I think, and help crypto as a whole.
Do you think that the regulators, meaning the SEC or other federal regulatory bodies, having a more in-depth control over what goes on is really going to flatten out the landscape to allow this to become more normalized and accepted by endowments and pension funds, some of the more safe type investments?
Well, you mentioned now pension funds. Now, I'm not sure if, for example, a pension fund is anyway in the venture business investing. I'm not aware how it works in the United States. In Switzerland, for sure, they are not. But it's not the risk category that a pension fund would invest. But I certainly think that the regulators will take measures. But honestly speaking, and I think the SEC said it very beautifully, I don't think it needs so much more regulation, to be honest. I mean, you have a token that can be an equity. So there is regulation for equity. You can just apply the same regulation on tokenized equities, for example.
Well, here's what I mean by that. Here's what I mean by that. You mentioned ETFs, exchange-traded funds. Those companies do invest in funds that invest in those vehicles. Do you think that that's really where we're going to have to go with this, so that we've got a more formalized, structured type of aggregate investment vehicle, like an index, to really bring this about so that it's mainstream and we get the more conservative money to actually legitimize what the people, because right now you've got a lot of people that call themselves not evangelists, but I wanted to say that they are, I'm sorry, searching for the word, but they're anarchists. That's the word that I hear a lot when I go meet with them. Yes, we're anarchists. Like, that's good, but when you start stepping up to hundreds of millions of dollars coming in on a vehicle, you can't be an anarchist. in this business if you're going to make it for a long time. So that's what I'm asking. Do you think that we're going to have more structured averages off of more currencies that prove themselves to be something that people can get a steady either uptrend or a steady downtrend without so much volatility going on in the industry before it really becomes legitimized enough for the rest of the world, the big banks, to actually step in and direct their clients to move money in this direction?
So first of all, to your question, I think ETFs are a very good way to bring major money into the space. Yeah. On the other hand is the counterpart kind of, which is derivatives, right? I mean, structured products could be another way how legitimate money through banks. Let me put it this way: a bank customer might actually own then cryptocurrency without knowing it. Let's put it this way. I mean, who really knows when you invest with a bank and you have a portfolio or a mandate what really every single position is that you have? I mean, so I myself find out that some of my investments that I own stocks in some companies that I actually didn't want to own stocks through a mandate. But I'm just saying this way definitely will legitimize and make it easier for major money to come into the market. I do not believe that the cryptocurrency and blockchain sector will one-to-one copy the way it worked in the normal, in the equity market and the banking system. I think there will be changes coming that the technology enables, but I always tell people, let's not forget, most of the things we set up and regulatory things and checkups, audits, all the kind of thing is human made. It's not out of technology issues. It was because we wanted it, so we put it there, or someone wanted it. And I think the same kind of people want to imply these things on the new thriving sector of blockchain, for sure.
Okay, thanks for that answer. Vertex, tell our audience, what is Vertex?
Well, Vertex started as a small capital, well, small, it's the subject definition, a capital company out of the Middle East, where we manage the assets of some Middle Eastern high net worth individuals. And then we saw the problems in the market right early on, 2017, with liquidity. So you bought a token, and at that time, been spoken to say it was all utility tokens. So a lot of tokens have actually been issued and then went on an exchange at one point, but some of them didn't. So mostly projects that sold out in private sale did not go on an exchange. We found it very risky to continue that approach without having the proper financial infrastructure in place. So Vertex came up with the idea and say, hey, why don't we create an OTC secondary and third market for project tokens, especially with an eye on security tokens, because we believe that an exchange listing for a new startup, freshly raised, funded company is not needed, where one owner of the token might sell a big amount of tokens and therefore like pressure the price. So we see a huge need for that. It exists in the private equity market. So why again would it not exist in the cryptocurrency market? Right now, as we speak today, over 70% of tokens are not listed on exchanges, which means all these exchanges we talked in the beginning share 30% of the market, of the tokens itself. So it's a huge market we're going to tap in, and we're pretty sure it will be just growing. The market will just be growing, and there will be a lot of competitors coming out soon. And we just try to be ahead of the game.
Well, I can see that you are. I'm just curious about the liquidity factor, because that is the main the deal breaker for people to actually feel more comfortable with this. From what I've spoken to, a variety of people who have exchanges, a variety of people who have tokens, security, utility, and that seems to be the big issue on this. Do you see that as needing to get liquidity from the established banks that now provide liquidity to the exchanges, equity or futures, or do you see that the disruptive process, meaning having your normal everyday investor create the liquidity without having to bring in the top banks in the world? I wanted to get that opinion from you.
I mean, first, liquidity means like if you own a project token that is not listed on an exchange, how can you sell it? Right. So what I think right now in the market, what people forget is the market is hungry still, even that there is not much public investing, but there is a lot of projects that closed on a private sale or some funds together, 2-3 funds together, raised $20 million for one project. And at one point, if they want to get liquidity for it or involve the public, they can either do it with a public sale, which with security tokens will be a bit of an issue. So they rather sell from tier A funds, for example, to tier B funds, tier C funds, so one level down. And I think the liquidity, what I want to say is that the community can provide a lot of this liquidity. So being said, there is a lot of projects that I would like to actually, as an individual, be part of, but I can't because I cannot come up with $500,000 or $1 million worth of Bitcoin or Ethereum or fiat. So if such projects get available to the public on a later stage, especially in terms of security tokens, I think that's a huge win, and that's where the liquidity comes from. Also, the way back. I mean, there's a lot of individuals that might want to sell, and the project itself wants to buy back the shares. But you don't just go for such a purpose on an exchange. Maybe you actually want to do that specifically before an exchange listing, so you can control more of the shares before you actually go on an exchange.
Got it. All right, Alex, thanks for being a guest on the show. I really appreciate your answers and the chance to talk to you about this in earnest.
Thank you very much. It was great having me.
My pleasure. All right, you've been watching CEO Money with Michael Yorba. Thanks for joining us. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.